Everybody, it's Xavier here, talking a little bit about NIO. We actually had a pretty decent day in the market in terms of the portfolio. You can see up over almost 2% in terms of the actual market. At best, the market was up. The SPYs were up 1.3%. We have seen, of course, the market move back above 30,000. As you can see here, we have what looks like over the past several trading days, what looks like a ceiling of 30,002 over the past like 5, 6, 7 days. The market's basically been hitting that point, coming back, hitting it, basically testing that point over the past couple of days. And of course, the more we hit these areas of resistance, eventually, of course, we may see a break to the upside. Now, of course, for this particular video, we're talking a little bit about NIO. There was an article that I took a look at before. Electric EV vehicles, of course, sales expected to grow by 50% over the next year. And for me, and NIO would be a good investment. NIO recently had a little bit of a sell-off, and that's of course because they issued more shares into the market at, I think it was about $37. Their first issue of shares was at $17, and I believe the last one, according to this article, was at $37, which is why we've seen a little bit of a pullback in the NIO stock. Actually, looking at NIO in terms of price, currently, as you can see, NIO has basically had been trading in this channel. Obviously, it did break to the upside with good earnings, and of course we've seen NIO stock basically pull back, and it's now trading in this little bit of a channel with what looks like to be at about $38 as the floor. I've taken a small position. I'm looking to put in at about $3,000 into NIO, and then probably put in another 1,500 into Switchback Auto. I do think we could see a little bit of a pullback. Some people are saying that NIO could possibly test $30, but I'm not sure what the catalyst would be for the stock to drop from at least its lowest resistance point, which is 38, into 30s. I'm not quite sure what's going to cause the stock to drop 21%. But again, the market has been pretty volatile. And of course, there's been a lot of volatility on the upside. Basically, anything above what looks about $45, there's a lot of volatility, whereas NIO is basically been trading in this channel for what looks about 2 weeks. If you look at the trading days, it's traded basically between 38 and 45 for about 2 weeks, where of course there's been a little bit of choppiness to the upside. So for me, if I was looking to add a little bit more to NIO, which of course I am, it's probably going to be as close to 38 in case, of course, the stock does drop down to 30, which would be your next level of resistance. That's basically what I'm looking at for probably about the next 2 months. I'll be adding more to NIO. I do want to see if the market is going to have any sort of a pullback. But again, sometimes it's just better off being in the stock than waiting for a stock to pull back, because of course you could miss the opportunity for NIO basically to come back. NIO, of course, for 2021, they're expected, of course, obviously to grow. Of course, the reason for them issuing more shares is, of course, because they are a new company and they do want to take advantage of the share price so that they can basically have more cash on hand for, of course, basically expanding. This was an article that came out in Market Watch talking a little bit about NIO. If you're interested in learning a little bit more, perhaps of what, what these financial analysts and what the article talks about, I'll leave a description in the video. For me, I typically just pay attention to price points. That's because we hear a lot of different news, and sometimes, the market either reacts in a different, goes a different way. You never know really how the market is going to react. The only thing for me that typically matters is it a good company? Are they going to make money? Do they have a solid moat? What's the amount of competition, etc.? And price point involved, and price point and volume. That's basically what matters to me. If I think it's a good company and I think it has a long-term future, what typically matters for me is where I'm going to be getting in. Like I said, for me, NIO, I'd say if you can catch it. Yesterday it was trading at around 39. Unfortunately, I didn't have enough cash on hand to take advantage of it, and of course today we saw a little bit of a pop. The other stock that I did want to talk about really quickly was Chewy. I've done quite a few videos on Chewy. Chewy, of course, had an amazing day today. I had been calling this stock out way down here way down here into the 50s. I had originally got in here, got out, got back in into the 50s, and I've basically been riding it up. I only had just a handful of shares. I've traded it in my M1 account and as well as in my TD account, and I've slightly traded it in my Webull account. But as you can see, Chewy had an amazing day, up 10%. I am perceiving that eventually this stock is eventually going to hit $100. For me, that is my price point where I am going to take at least 50% profit, and then I'll basically let the rest ride, which would pretty much be free. Currently up $400. I really don't have too much in it. Excuse me. Where are we? Here we go. So as you can see, this is basically, I'm up almost a little bit under $500 on the 11, I think put like 1,100 bucks into it. I wish I had put more, but I did make a pretty good amount in basically between all of my accounts. I've done fairly well. Again, this account is primarily designed for passive income, but I do have a small portion of my account that is dedicated to risk. And I basically, once I cash out of that, I take the profits and I put it into dividend paying stocks, and then I basically take the principal and then reallocate that principal into other stocks, like for example Palantir. But that's basically it for those who have had the opportunity to get into Chewy. Like I said, I'll probably be looking at taking some profits at about $100. We'll see probably about another 10% rise in the stock, and then I'll reevaluate where it's going to be. It was up today because I believe they struck another deal and it basically was going to lead to increasing sales. But for the most part, I think my price point that I had already set for myself was once it hit $100 that I was going to take a little bit of profit off the table. I figure I'll take about 50% off the table and then basically just let the rest ride, and then reallocate the rest of that money into something like NIO, which I think has 40 or more percent upside potential, especially if NIO subsequently breaks back out. So if NIO basically does come back down to about that 38, 39, where I think it will trade into the channel, you could see what looks like, if it retests its recent highs, you can see 50%, especially because NIO has a lot of volatility. So there's a lot of potential for room to the upside. Gonna have to wait and see. That's basically gonna be it for this little bit of an update. This is basically what I'll be doing for the next couple of weeks. I want to allocate some more money. Like I said, with JetBlue, we are seeing a little bit of a pullback. So for me, it's a buying opportunity over the next month or two, especially coming into the new year. A lot of news is going to come out in relation to the stock market as well as to the presidency, and we're just basically going to have to wait and see. The Wells Fargo play that I called out is doing very well, as you can see, along with stocks like, for example, ExxonMobil and Wells Fargo, both moving high. Wells Fargo, if you've been watching it, Wells Fargo, it's basically having a little bit of a hard time breaking through that 30-point area, and that's basically because that's right about where we hit quite a few times. Right about here, you should be able to see 1, 2, 3 times where the stock tried to break above 30, and it had a little bit of a hard time, and then I perceived that the next level of resistance would be at 34. So these are basically the long-term plays. Wells Fargo was probably 5 or 8 years into the future, along with things like ExxonMobil. These are basically my long-term recovery stocks that, of course, that also pay dividends, and that's basically why I've been investing into them. I probably will add a little bit, probably add another maybe 10 or 15% to the play, but for the most part, I've gotten in the allocation that I wanted, which was about 2,500 or so, and I basically want to ride that out over the next couple of years, adding a little bit at a time. But really, I have other things that, of course, I am interested in that I think will have like upside potential a bit more quickly than stocks like, for example, a lot of these recovery stocks may take a couple of years. Like, for example, like things like Norwegian. These stocks, of course, will take a little bit longer to recover where they were, potentially years. And so things like NIO, of course, have a lot of upside. Switchback, for example, is another stock that I've been watching. Again, if you're watching Switchback is also trading currently in this little bit of a channel. And even though we had a little bit of volatility to the downside, as you can see, the stock basically ended right about where our support line was. And so that's good that we're basically being able to see the stock formulate supports and resistances, and that gives us the opportunity to pay attention to where we can basically enter and exit the stock. That's going to be it for now. Thanks for watching, and I'll catch you next time.